Hello, welcome. So the purpose of this video is to create a 90-day cash flow forecast. As you can see, we have our 90-day cash flow forecast below. It's not quite filled out at all. In order to do that, we need to take a look at some information that we have above. Now, our information also, we need to calculate a few pieces of information before we can begin. But let's take a look at what we have so far. So we have our credit sales. Okay, so our credit sales from November to March. Keep in mind some of these numbers might be actual, some of them might be estimate, but regardless, we have these figures and we're going to use these figures to create a 90-day cash forecast. Now with our credit sales, it's important to note that we don't actually receive this amount of cash in November because this is just credit. So in order to understand how much cash we're actually receiving, so in this case, we're actually going to collect or receive 80% of that cash in the next month. So to make it easier for us, we're going to initially simply figure out what 80% of our credit sales are for November. And then we're going to figure out what 20% of our credit sales are for November. And once we do this, it's going to help us be able to complete the cash flow statement or the budget. So we're going to just simply carry over that formula for all of the months, and we've calculated both 80 and 20% of our credit sales. Cash sales, pretty straightforward. We're going to actually receive this amount of cash in November. Now, credit purchases paid next month. This is similar to the credit sales, except instead of receiving money in the future, we're going to actually have to pay out money in the future. So we've as a business have purchased something on credit in November, but we actually have to pay that cash out in the next month, and therefore credit purchases paid next month. Cash purchases, again, straightforward. That's just money that we actually have to pay out in that month. And then we have our payroll. So payroll in this case is 35% of total sales. So our total sales are simply our credit sales. Actually, I should use this number. Plus our cash sales. Okay? So that's our credit and our cash sales. And we're simply going to get 35%. We're going to calculate 35% of those sales. And then we know basically that's our estimate amount of payroll we're going to have to pay out. So this is actually what we're going to pay out every month. And we also have some more information here that we'll be using as well as we complete our 90-day cash flow forecast. But we can begin now. So when we begin in January, usually what is given is you're always going to have a beginning cash balance in the beginning of your 90-day cash forecast. In this case, our beginning cash balance is $3,000. So we start with $3,000 in January. Let's see what funds we actually will be coming or receiving in our forecast for January. So we're going to start with our cash sales. So our cash sales for January is going to be $15,080. Now, collection of accounts receivable next month. So again, this is basically the money that has materialized due to the credit that was owed to us. So in this case, we're looking for the 80%, okay, of our credit sales from December. And the collection of accounts receivable for 2 months is simply, we're going to be looking at the 20% of the money collected in November. Okay, so now this money has actually been materialized, and we're actually going to get this cash in January. And sales of fixed assets, well, it does not look like we've sold anything of any value. Okay, so we don't actually have sales of fixed assets. We can just leave that as 0 or empty. So now we can actually get the sum of the money that's been coming in, or whatever we had left over from the previous month. Okay, and we have our total cash available. So this is the cash that's coming in January. Now we're going to take a look at our disbursements, or the cash that's coming out, or our outflow. Okay, so cash purchases. Well, what did we spend in cash in January? Well, we have cash purchases of $2,985 here. Okay, accounts payable. So in this case, this is going to be the money that is owed from our previous month. Okay, so that's the credit that we paid in December. Now it's actually due in February or in January. So we're going to take a look at our credit paid next month. Okay, and our payroll. So our payroll is simply going to be the amount that we have to pay for our staff in January. Okay. Now, service on a mortgage. Let's take a look at some information here. Is there anything about a mortgage here? Yes. So we are actually paying a debt service on mortgage. It's a monthly expense of $10,000. Okay. Insurance premium. Well, let's take a look. We do have an insurance premium here. It's prepaid, so we do have to pay it at the beginning of each year. Looks like we're paying $3,000, but we are paying it every 3 months, so that's good to be aware of. Property tax. Do we have to pay any property tax in January? No, we don't. It looks like we're paying property tax in February, but for now, we're okay in January. We're not going to be paying any tax. And we seem like we have some sort of investor. We have a partner that we have to pay out. So let's take a look at what we have to pay out here. We do have a partner distribution paid out every month, or every other month actually, so let's be aware of that, for $12,500. Okay, so we can now total the amount of money that we actually have to pay out, or our outflow for January, and there it is. So now we simply are going to take a look at the difference between the money that comes in, the inflow, subtracted by the money that goes out, and we'll see what our ending cash balance is. Okay, so we have an ending cash balance of $13,842. Now, with a cash flow forecast, we usually have some sort of minimum balance or budget that we want to make sure that we don't go below. In this case, we have a minimum cash balance of $10,000. So every month, we want to make sure that we're not below $10,000. Okay. So, and what we want to find out is, are we under or over that? Now, it seems like we're doing okay, so we're simply going to take the difference between our ending cash balance and our minimum cash balance, and it looks like we're good. We have a surplus, or we have an overage of $3,842. So we're good for January. We've passed the test. We've made our minimum cash balance of $10,000. Okay, now let's take a look at February. So starting with February, we're going to look at our beginning cash balance. Now that's always going to be our ending cash balance of the previous month. So in this case, it's going to be $13,842. This is what we have to start with in February. Now let's take a look at our cash sales for February. Here we have our cash sales, $13,520. Again, we're going to take a look at the amount of cash that we're actually going to get from our previous credit sales. In this case, we're going to take a look at our January credit sales of $52,800. And we actually want to take a look at our December. 20% of December is going to now materialize in February. Okay. And again, we don't have any sales of fixed assets. We're simply going to add these values up, and we now know this is the amount of money that's going to be coming in, or inflow, for February. Now let's take a look at what's going to come out. So looks like we're going to be spending about $3,288 on cash purchases. Our accounts payable. What did we have to pay last month? Well, we spent about $29,860 in credit, so now we have to pay that off in February. And we'll take a look at our mortgage. Or sorry, we're going to take a look at our payroll next. So our payroll is going to be $29,984.50. Our mortgage is going to be, again, $10,000, so that's a flat rate of $10,000 every month. Insurance premium. So do we have to pay insurance in February? Well, we've paid it in January, and it's every 3 months. So no, we actually don't have to pay insurance in February, so that's good to know. Property tax. Property tax, oh, it is due in February, so we do have to pay $15,000 in property tax in February. And our partner, do we owe him or her any money? We don't, because it's every other month, so we're okay this month. Okay, so again, we're just going to figure out the sum of our disbursements. And it looks like we're paying $88,132.50. So our ending cash balance is going to simply be our total cash, subtract our total cash disbursements. And looks like our ending cash balance is actually going to be below our minimum cash balance. So again, remember, we want to make sure that we're above $10,000. Looks like we're a little bit short this month. So when we're forecasting, we notice that we're a little bit short. In February, we might want to make some adjustments. Finally, let's take a look at March. So our beginning cash balance is going to be our ending cash balance of February. Okay. Cash sales in March are $15,280. The collection of accounts receivable next month. So again, we're going to take a look at the 80% collected in February, which is now going to be cash for us in March. And we're going to take a look at the $13,200 in January that is now cash for us in March. So we're going to total that up. And there's our total cash available. Now let's take a look at our cash purchases. Cash purchases, well, not too much, $3,762. Accounts payable. So again, this is what we purchased on credit in February now. It's now due in March. And our payroll is we've calculated 35% of our total sales. Service on our mortgage, still hasn't changed, still $10,000. Insurance premium. Let's take a look at insurance premium. Again, no, we don't have to pay the insurance premium this month. What about our property tax? No, usually you pay once a year, so you don't have to pay that. And the partner. Does this partner need any money? Yes. I don't know who made this deal, but we have to pay this person every other month $12,500, so we need to account for that. And now we can sum up our total cash disbursements, the cash that is leaving our business in March. And now we'll just take a look at the difference again from total in minus total out. And again, we want to have that minimum cash balance of $10,000. And if we take a look at the difference again, we are short again. So you can see there's a bit of a trend. We are not meeting our minimum cash balance of $10,000. But regardless, we have completed a 90-day cash forecast. Thanks for watching.